Hi, this is Andy Flipiuk in Toronto for the week of January the 28th. Today, the U.S. Federal Reserve basically threw in the towel as they stated at their meeting that they will not be raising interest rates and they will be, in all likelihood, adjusting the size of their balance sheet, the runoff that they've been talking about. Now, this is very interesting because back in the fall, Chairman Powell basically said that the Federal Reserve was a long way away from neutral policy. Since that speech, the S&P 500 had dropped 19.6% into Christmas Eve, and suddenly central bank balance sheets were actually expanding in late December. And as of January 15th of this year, the four central banks, the large ones, Japan, Europe, China, and the US, have increased by $428 billion the size of their balance sheet. So this talk of tightening looks like it's already done. I've included an article by Trey Reich of Sprott USA in which he shows some very interesting data. He basically claims that the Fed is now officially done and that in the last three recessions, after the Federal Reserve pauses, they are cutting rates within 6 months. That's a very quick turnaround. So based upon what we're seeing now, if history is any guide, it's likely that the Fed will be cutting interest rates in 6 months as opposed to continually tightening. And as I say, this changes everything for market participants because we're under the belief that the economy was strong enough to handle this. Globally, it clearly isn't. So all of the calculations going forward change. When you have markets, and Trey Reich talks about this, when markets have this much debt globally, it keeps rising in relation to GDP, that the one major determinant is interest rates and the central banks. So the central banks will drive the stock market and all financial markets going forward in a way, in all likelihood, that we've never seen before. So analysis really has to focus on whether they're putting enough money into the system. And this is going to change the relationship in all likelihood between gold, stocks, and bonds, etc. So stay tuned, and please have a look at the article. I've included it on this video. Thanks for watching.